Assalamu alaikum everyone. My name is Arman Nishad Jaman and my roll number is 23106 36128. And my presentation topic is an overview of the latest monetary policy of Bangladesh Bank. So let's start. My first slide is about Bangladesh Bank's monetary policy, July to December 2025, a new era of stability. Today, we are going to explore the latest monetary policy statement from Bangladesh Bank. This isn't just a document, it's a strategic plan to guide our economy. As a central bank, its core purpose is to maintain price stability, which means controlling inflation, while also supporting economic growth and a resilient financial system. So the next step is summary of the latest monetary policy, July to December 2025. The latest policy is a continuation of a tight monetary stance. The central bank has made it its top priority to bring down inflation, even at the cost of short-term growth. To combat this, the central bank has held the key policy repo rate at 10%. This approach has already shown results, such as headline inflation, which hit a 12-year high of 11.66% in July 2024, has now eased to 8.48% in June 2025. The bank's goal is to bring this down to a ceiling 6.5% for the fiscal year. The next part is private sector credit growth has slowed dramatically to a historic low of just 6.5% in June 2025. In contrast, public sector credit growth remains high at 13.5%, reflecting the government's borrowing needs. The next slide is about the significant changes compared to the previous policy, January to June 2025. The most critical changes are a shift in focus from managing to a fully flexible market-based exchange rate regime. In previous periods, the bank heavily intervened by selling dollars from its reserves. Now it will only intervene to curb extreme volatility, allowing the market to set the price. This is a huge step in building more durable foreign currency reserves. The bank projects private credit to rebound to 8.0% in the future. Let's see how they will do it. Interest rate regime. While the policy stance remains tight, the policy repo has been held steady at 10% since October 2024. Next is credit growth. The private sector credit growth target has been lowered to 8.0%, while the public sector credit growth target has increased to 18.1% for the fiscal year. Exchange rate policy. Bangladesh Bank has moved towards a more flexible exchange rate regime, allowing market forces to have a greater influence. It will now only intervene to curb extreme volatility. Banking sector reforms. There's a renewed emphasis on the implementation of major reforms, including the Asset Quality Review AQR and the new Bank Resolution Ordinance 2025, which were previously in the planning stages. Move on to the next slide. It is the tools in actions. The central bank uses a number of tools such as interest rate corridor, the 11.5% SLF and rate and 8.0% SDF rate act as boundaries for short-term market rates. Next up is open market operations. They use this to manage liquidity by buying and selling government bills. Then liquidity support. They also provide targeted liquidity support for banks and financial institutions like the Islamic Bank's liquidity facility to ensure the system remains stable. Last one is the forex market intervention. The bank can directly buy or sell foreign currency to manage the exchange rate and ensure stability. This is a key tool for managing external pressure and building foreign exchange reserves. The next slide is about the fixing the system. Monetary policy is not just about rates. The central bank is also tackling deep-seated issues, such as it is implementing an asset quality review (AQR) to accurately assess and addresses non-performing loans. Next up is the new Bank Resolution Ordinance 2025, which provides a legal framework to restructure or dissolve banks that are no longer viable, which is a crucial for financial stability. Moving to the next slide, it is about the recommendations for policy reforms. For the future, a few reforms are important, such as transition to a full inflation targeting regime. The central bank should formalize a clear rules-based framework with an explicit inflation target to enhance its credibility. Then, improve monetary transmission channels. This involves developing a more reverse secondary market for government securities so that changes in policy rates have a quicker effect on the wider economy. Then strengthening financial sector resilience. The bank needs to fast track its new reforms, like the Asset Quality Review AQR and the Bank Resolution Ordinance, to address non-performing loans and improve overall governance. The next step is promote private sector credit. Ensure necessary funds flow to productive sectors like agriculture and small businesses through targeted refinancing schemes. And the last one is improve fiscal monetary coordination between government and the central bank. So, at last, we have reached the conclusion, a path to stability. In conclusion, the latest monetary policy from Bangladesh Bank is comprehensive and determined effort to address the country's most pressing economic challenges. By maintaining a tight stance, allowing for market-driven exchange rates, and implementing bold structural reforms, the central bank is laying the groundwork for a more stable and resilient financial future. Thank you. That's all from my side.